Ashwin Patil, the research analyst at LKP Securities, joins us now. Ashwin, good morning. Is the risk reward still favorable for long-term investors in the tyre space? Ashwin, you're on mute.
Yeah, sorry.
Go ahead.
I think most of the tire stocks have hit their their 52-week high, I would say, but there is still some steam left because we know that the RM prices, like the crude oil prices, are softening. Up to a good level, and also the natural rubber prices are also, they have also not risen a bit too much in the recent past. Also, the auto demand, as you mentioned earlier, is going quite robust in all the spaces where they cater to, like the PV two-wheelers and the commercial vehicles. So I think there is there is a reason why these stocks have gone up, and I think there is still some steam left in some of the stocks going forward. So one needs to be there in the tire space if if they have already bought it. But to buy from these levels, they will get an upside close to about 10 to 15% at least.
All right. Hi, Ashwin. Morning. But what would be your preference in the pack then? You're talking about 10 to 15% return from here on. Stocks have already seen a good recovery from the lows. Preference of these tire stocks?
I like CEAT in the tire space. With the target close to about 1650, it has already risen. It is already close to our earlier target of 1500. We are bullish even further on the stock because it is catering to all the three sectors, and it is one of the top three companies in the tire space. And its financials are also getting better, and also on the export markets, it is doing well. It has expanded its coverage, distribution, as well as its business in the export markets of Europe. Definitely, there is some sort of slowdown in Europe, which will affect the other tire makers like Apollo and Balkrishna Industries up to some extent, because they have a larger focus on the European markets. But CEAT is a small player over there, and it is more focused on the domestic markets. So the domestic, we are expecting some good revival in the rural markets as well because of good monsoons and better spread at this point in time than the earlier months. So the auto demand is expected to do well, and therefore CEAT and the other tire makers, like the tire sector, I would say in totality, expected to do well.
Got that. Ashwin, good morning. Since you referred to Balkrishna, that's been the only stock which has underperformed, right, and big time. Is it because of just the global nature or something else? And what's your view on the stock?
Yeah, I am positive on the stock, but definitely there is a lot of pressure because about 50% of its top line is coming from the European markets, which is facing the music at this point in time. So Balkrishna Industries is the tire company, the only tire company which is having so much of exposure to the European markets, where there is a lot of slowdown at this point in time. So I think that that's the only thing which is hurting them at this point in time. But surely it is a good company, and this time also should pass away.
Okay, it's a good company. The other big trend that we're noticing, since you spoke about Europe, is what's happening in the two-wheeler space, right? Exports have been under a lot of pressure, not just in Europe, in Africa as well. And this morning, CLSA has downgraded Bajaj Auto. Would you be cautious on the two-wheelers because of what's happening in exports?
Two-wheelers as such, not on the overall sector, I would be cautious. But certain companies like Bajaj Auto, I would be cautious because Hero MotoCorp, you know that it's hardly present in the export markets, and therefore it is going to get the benefit from the positivity that we are seeing in the domestic markets. But yes, Bajaj Auto, about 50 to 60% of its top line or the volumes are coming from the export markets. Out of that, 50% is Africa, and out of that, 50% is Nigeria. So, about 15% of its top line is coming from Nigeria, where we are seeing a lot of pressure because of the currency depreciation, as well as the retail sales moving a bit down. So, Bajaj Auto is one of the stocks on which we would be cautious at this point in time. Earlier, before the Nigerian pressure was there, we were quite bullish on the stock, and definitely we are bullish on its domestic prospects, its new launches, etc. But just the thing is that at this point in time, with the pressure that we are seeing in the Nigerian markets, we are a bit cautious, and we won't recommend a buy rating on Bajaj at this point in time. But yes, Hero, we are positive on.
All right, we'll leave it there today. Thanks a lot, Ashwin, for joining us.